overcame a problem, it was often from talking to somebody who had done the exact same thing that I was hoping to do. Here for you to help you exactly where you are now because they've been there before too.
Welcome everybody. Feel free to turn on your camera if you're up for it. You know, if you're in a spot to be able to do that. Always love saying hi. You know, Tommy's a friendly guy over there, so he'll be able to really help out there on this whole thing with you guys. He's been phenomenal to work with in the past, and just really kind with his time, you know, in educating the Deal Machine community here. So I know if this is your first one of these, welcome to these. I know our whole goal with this is we're Deal Machine's hosting these master classes, but it's really not about Deal Machine in any way. It's all about you guys and investing in yourself, investing in your education, investing in your team and your network. So Ryan is going to really, I would say, be your go-to person for all Deal Machine specific questions. Throughout this, he'll put his office hours in the chat. He hosts those almost every day now, where you can come in and just join and ask Deal Machine specific like support questions and how do you do this with the Deal Machine? How do you do that with Deal Machine? So save those questions for Ryan specifically. Tommy is one of, we bring in weekly outside experts that are world-class at what they do and can educate you guys on all things real estate. We've done all kinds of stuff like in the past. I know last week was Zach Booth, which he talked about how do you overcome the top seller objections. That was like one of the top couple we've ever done. That one was really, really good. So I highly recommend watching the recording for that one. Before that was Paul Myers, which I'm not sure if Paul's on yet today, but he's a regular on these too. It looks like David's on. So there we go. Hey, David. So you've got a couple Deal Machine.
Hey, Matt.
There we go. Got a couple Deal Machine people on here for you guys. Paul talked about underwriting flips. That was really, really good. Steve Trang was before that talking about the perfect sales script. So we've had a lot of just exciting experts on recently talking about a variety of different things. Today is going to be a little bit of a unique one, a subject we don't touch on a ton, but really talking through tax strategy, legal structure, things like that with Tommy, who is one of the top experts out there in that. So I'm really excited to have on Tommy today. And again, the purpose is to learn from Tommy, learn from world-class experts like that, ask questions yourself, ask specific, it's a great chance to ask a specific Q&A of what you're dealing with in your business every day. And you're surrounded by other people who are taking real estate serious and building their own real estate businesses. So we do have a networking spreadsheet that Ryan just threw in the chat there too. It's dealmachine.com/elite. If you go in there, you can add your contact info on there and feel free to use that as a way to reach out to other people who are part of the Deal Machine community there and be able to network with people in your market. So wanted to make sure I covered all that for you guys, especially people who are new here. So feel free, if you're new here, throw that in the chat too. Love to see if this is your first one of these and give you guys a shout out too. But I'll say before I jump into it with Tommy to begin with, we do always love to kick off these with good vibes here. So if anyone's willing to share big wins they've had, whether it be professional, personal, a new deal they're working on, a new partnership they are solidifying, I'll give you guys the floor. So Sean, you have your hand raised. Go for it, man.
Well, this might sound like a shout out, especially with Tommy being here, but last night I just signed up and did a holding company and 2 subsidiaries for my coaching business and for my wholesaling business through you guys. It was flipping awesome. Then after I got done with that, I went and drove and added 46 properties in with my Deal Machine. And I got a new phone number. I got my PO box set up. I'm just ready to rock and roll. Thanks, guys. I joined TTP when I met you guys in Arizona with my son.
Yeah,
and I'm just ready to rock and roll. So
that's awesome.
Did you set it all up with us, with Prime Corporate?
Yep, with Vaughn. Yep.
Okay, he was treating you well.
Oh, it was fantastic, man.
He better.
And he's a real estate investor too, so it was like he knew exactly what I was talking about. And the price. So
Sean is actually a paid advertisement. Check.
I was going to say, just because I'm wearing this gear and I got my Deal Machine going right here doesn't mean I'm. Nobody was.
Congrats.
Landowners were hurting the production and no compensation was paid. So.
Yeah,
well, John, it's no surprise you got a professional to help form your business based on how professional your Zoom background looks.
Yeah. Yeah, and then I'm sitting here in my sweats, but hey,
just an all-around professional guy.
Yeah,
it's still Minnesota.
That's awesome. David, do you have any wins you can share this week? Don't mean to put you on the spot.
No, I love being put on the spot. It's actually one of my favorite things to do. I'm super pumped to be closing on my 9th rental property. It's on the same street as 3 others that I own. So it's going to be very convenient for my small list of, people that help me out with the rental properties like handyman and my assistant. And so it should cash flow. I'm buying it for $160. And I believe that it will rent for $1,600 a month. So I'm super pumped. It meets the 1% rule. I'm putting 20% down, and it should be a difference of $500 a month there.
That's awesome, man. Ring the bell, Ryan, if you would throw that in the chat. But anybody else?
Ding.
There we go. Anybody else have a deal that they're working on right now or closing up, or anything exciting this week they're working on from that perspective?
I can go. I just had one close today.
Oh, nice, man.
This lady called me last month. She's like, "You've been mailing me with the postcards." I could not find her in my system. I was like, "All right, cool." So I do the whole, well, I don't tell her that, but I do the whole spiel, get the appointment. It was an out of state absentee owner. She's like, "I'm coming into town. My tenant's trashing the place. She wants to get out." So I get the appointment, hang up. I find her. It's in her lead was in DealMachine, but in the trash. I had stopped mailing her, or she had gone through all the sequences. And it had been a year since I had last mailed her. She had kept my postcard for a year and had followed up. So I got it under contract.
Oh my gosh, that's wonderful.
215 got under contract, wholesaled it the next day for 245, just closed on it this morning. So yeah, it was great. Got another one under contract yesterday for 75. Got offers at 120, 115. So I'm trying to get 125 for that one, but we'll see if I can get it locked up by the end of the week. So yeah, but it's been a good
Nice
month
stuff.
so far.
No kidding, man. Great work. Yeah, I mean, we definitely have a good handful of people who it's like old leads that they've been mailing to that, when they added the lead, even a year plus ago, it was just such a different market condition that now it might be better timing for that person to have a conversation. And yeah, I mean, it shows the power of follow-up. So that's great, man. Good stuff. Daryl, you have your hand raised too?
What's up, everybody? Can you hear me?
Hey, yeah, gotcha.
Loud and clear.
I got something exciting. We are broke. We have 4 properties that we have tied down all in different phases, and we don't have our first. We're about to list one of them. So I guess it's exciting and scary. Business line maxed out, credit line maxed out, bank account wiped out, but still excited for what's to come.
Absolutely. If you feel free to use this community as a networking opportunity too. Like if there's anybody on here that you can do deals with, throw that in the chat and what markets they're in and all of that. We want to help.
I appreciate it. I was actually just texting my partner Adrian that we should probably try to wholesale something to get some cash on our side. That would be nice.
There we go. We'll keep us posted. It's exciting, like you said, nerve-wracking, but definitely exciting times, man.
Absolutely.
Nice. Yeah, I know it seemed like there were a few people on here that we had met in Phoenix. I know Sean for sure. So we did that. We had on our end, we got involved with, there's an event through Burr Invest Academy this week. So if anybody's with them, like a BIA member, throw that in the chat too. I know we have a lot of new people on here. So that was a great win this week for us. Tommy, do you have any other wins this week?
Yeah, actually, ironically enough, so I had Daryl. This is going to be a cool little combo between all these wins. Actually, I've got my cousin lives in Missouri, and he called me the other day and said down the street, he lives in a small town in it's Ava, Missouri, and he said, hey, there's 7.5 acres that just showed up with 2 mobile homes on it, and this was on Monday. Bought it yesterday. I close on it this afternoon. So 7.5 acres, 2 mobile homes, which real estate is not. Most of my investments that I have outside of the work and time that I put into prime corporate are real estate. But Daryl, one thing that I just want to talk to you about, part of what we do at Prime is we help people build and develop business credit and corporate funding lines. And I've been building up my business credit for the last 8 years. And I actually ended up just paying for that 150,000 with a business line of credit that I have at 4%. So it's my own money where I have the 4% on the loan, which I'll still be able to write off, but they're both already rented and it should be cash flowing. So I don't really ever share real estate wins of my own, but since you're asking, here we are, and
Yeah,
pretty timely,
absolutely.
kind of cool.
Yeah, it looks like Ava's like 3.5 hours away from me. I'm in St. Louis, so
Oh, is it?
yeah, same state at least. But
I would even though it's close, I would assume that you've never even heard of it. That's how small this town is.
it's funny. Nice.
Yeah.
Man.
When I was talking to the realtor yesterday, she was like, we have to make sure you can get approved. And I'm like, search housing prices in Salt Lake City, Utah. This is pretty wild for me to be talking 150. This is
Yeah, a little different ballpark. Yeah.
Aaron, weren't you on last time? I feel like I recognized you. I think you asked some good questions last time I was on. Were you here?
He might have been.
Yeah, probably. I think so.
He's a regular. Yeah. We got some regulars on here for sure. So awesome. If there's no other shout outs there, I can jump over to Tommy. That's kind of a good kind of little bit of an intro for you, but just to tee up Tommy for everybody, he's the president of PCS Prime Corporate Services. I know he does a ton of work with like TTP and Brent, for example. So that's where Sean was being looped in with him. But Tommy's company, I mean, you've helped how many entrepreneurs set up businesses now? It's crazy.
We just barely passed 125,000.
Yeah, that's ridiculous. So yeah, on the legal side, how to structure your company, how to structure anything you're doing on that front, an expert in that. On the tax side, also an expert in that, which is why he hasn't slept in a month. But I know he's taken time out for us to be able to really tackle a lot of that today. Of like, how do you what are those real estate tax and legal strategies you need to know this year, and where are those things evolving? So, Tommy, can you maybe start off with a little more about your background, and I'll give you the floor, man.
Yeah, for sure. Thank you for that. Thank you for having me back. I appreciate it. And thank you everyone for being here. Oak, I got to tell you real quick, you don't recognize names unless they're relevant to something in your life often. And my good buddy just barely had a new baby yesterday and named him Oaks with an S at the end, but that was the first I'd heard that name, and here we are. So nice to meet you, Oak.
Good name.
So Prime Corporate Services, we focus on entity structure, business credit development, tax preparation, tax filing, and then also estate planning as well. Trust, wills, living wills, power of attorneys. That's good. So a little bit about me. I'll take you all the way back. So my parents got divorced when I was 3. I know you're like, where's this going? But my mom was a real estate agent, and my dad owned a real estate brokerage company. So I always just thought real estate was the route that I was going to go for whatever it is that I was going to do. And that wasn't totally wrong. But I take you all the way back to when I was 3, because I joke that the only thing my parents ever agreed on was that their kids should be self-employed. So they accomplished that. They at least had that victory. We both are self-employed. My sister actually ended up coming over here and helping us out the last couple of years, but she did a lot of life insurance stuff. So fast forward, when I was 18, my first self-employed job, I drove from Salt Lake to North Carolina and knocked door to door selling pest control, which was just a jump start into business in general. You're the sales, you're the marketing, you're the face, you're all these things. Really cool experience. I was there for about 4 months and made $40,000 in the 4 months that I was there. At 18, I thought I was like the smartest human in the world, right? Came home, told mom she can't tell me anything anymore, the whole 9 yards. But then tax time rolled around and I owed $10,000 in taxes. And that money was gone. So I learned very early about how impactful taxes are for your business and your bottom line. From there, Prime Corporate Services, couple different jobs, couple different gigs in between there. But taxes, asset protection, entity structure was always a part of my life. My parents would fight every tax time, every tax year. And so I figured there had to be a better way. And just so everyone's clear, I am not a CPA. I am not an attorney. However, Prime Corporate, we've been in business for 10 years now, and we have 5 attorneys on staff. I've got about 70 accountants that are filing taxes full time. And we've got just under 200 employees total at this point. So it's been a crazy 10 years. It's been really cool. I can't believe the 125,000 number. But long story short, our goal and our mission, and the reason that I still like to give these presentations instead of having the CPA or the attorney on here, is I want to talk to you as an investor and as an entrepreneur. I have a lot of real estate investments myself. I've had a lot of wins and I've had a whole lot of losses. So the more that I can share of those with you, I think naturally the better. So before I jump into a couple of these things, does anyone have any questions on that, or Prime Corporate, who we are, anything about me? I'm an open book, so feel free if you have any questions.
Yeah, I mean, I'll go ahead. You first, David.
I want to know, how do I get $150,000 line of credit to go buy a property?
I got you.
At
All right,
4%.
cool.
Yeah.
I got you. So there's a couple cool things that you can do. So I want to start with the entity structure, and my paid advertisement, Sean over here, did a great job helping us get it started. But when we first structure entities, we really want to make sure that there's 3 things that you're paying attention to. Legal and financial can be overly complicated. Let's simplify it down to these 3 areas. Number 1 is privacy and protection. Let's make sure that you stay private and have your anonymity and give yourself the protection. Number 2 is maximizing on tax benefits, profit or loss, good or bad. And number 3 is showing yourself as a legitimate business, not only to your clientele, but to banks and lenders as well, right? So the first thing that we oftentimes will set up is a holding or a parent company out of either Delaware, Nevada, or Wyoming. We oftentimes lean towards Wyoming. I would assume, Sean, that's where you set yours up as well. And the reason that we prefer Wyoming is there's excellent privacy, but it's less expensive on an annual basis. The annual reports are very, very simple to fulfill. I joke that if you send your dog into Wyoming, they're coming out with an LLC. That's how ridiculous it is. But nonetheless, it makes your life a little bit easier on an annual basis, which is what we want to do. So Wyoming is excellent for the holding and the parent company. Nevada and Delaware are also great. From there, we like to set up subsidiary companies. And those are the ones that you're actually going to be doing business in, right? You can set those up in the state that you live in. You can set those up in the state that you're doing business in. We still usually recommend having, that's right. Yeah. Nevada just barely took away the anonymity. I'm so used to saying Nevada. I keep saying it. So thank you for that, Gene. Nevada's going to hell in a handbasket quick with all those laws. What's crazy about Nevada as well is they've been doing this for the last 10 years, and all of a sudden they take the anonymity piece away where your name is public information on the state websites, but the annual fees are still much higher. So if you still give yourself the privacy outside of Nevada, but still do business in Nevada, you can still accomplish that privacy aspect as well.
Nice. I will mention, not to cut you off, Tommy, if you guys have questions, feel free to throw them in the chat, and I'll try to keep gathering them, or hit the raise hand button too, and I'll try to keep gathering them as you go, Tommy. So
cool. Yeah, that sounds good. I'll open it up for a bunch of Q&A here shortly as well. So the as far as the subsidiaries are concerned, once again, we have to weigh a couple different factors. One of the common questions that I get in real estate settings like these is, how many properties should you put in one LLC, right? And what I will tell all of you is there is not one right answer. If you ask 100 attorneys, you're going to get 100 different variations of this answer, which is, it's part of what makes the legal and the financial aspects so difficult in any business. So once again, to simplify it, I've narrowed it down to 3 different categories that I feel that you should take into consideration when you're making that decision. Number one is how much equity do you have in that property? I care a lot more about properties that I have a lot of equity in than a little bit of equity in. So naturally, I'm going to want to separate out that liability. Number two is, what is your overall portfolio? And what I mean by that is obviously how many doors, how much equity, how much value. But in addition to that, if I have two properties for easy math that are $500,000, I don't want to have that outweigh my umbrella insurance, right? Umbrella insurance is usually pretty inexpensive until you get over $5 million. So I never want my umbrella insurance to be over $5 million. I'd rather start separating them out because it's going to save me money from an insurance standpoint in most cases and in most states. So number one, equity. Number two, overall portfolio. Number three is the emotional question for you. What is your risk tolerance? I have some clients that literally have hundreds of doors in one LLC and could care less. I have other clients that do a different LLC for every single property. So as long as you're weighing the pros and cons, you're aware of what your umbrella insurance is, we can separate those things out for you as you go. And Sean, unfortunately for you, I'm going to use you as the example the entire call here. So thank you and sorry in advance. But Sean, as you continue to get more properties, you can call Vaughn, you can email Vaughn at any time and talk through these different scenarios to make sure that you're making the decision that you're most comfortable with, right? Now from there, David, I had to build it up to get to the credit part because no one cares about the entity structure. You're just like, give me protection, give me tax benefits, show me as a business. How do you build business credit and corporate funding? Everyone has a legal name, a social security number, and a personal FICO credit score. We want to do the same thing for the business. Let's make sure you have the business name, make sure you have the EIN number, but you can build and develop a paydex score, PAYDEX, for your business. And the first step is going through that Dun & Bradstreet, which a lot of you are probably familiar with. The paydex score is similar to your personal credit in the sense that it's a numerical range, it's a credit profile, but it is different in the credit rating. So a paydex score ranges from 1 to 100. And just to give you a little bit of an analogy here, 80 to 85 on the paydex profile would be like you having a 750 to an 800. So it's separated into a couple different parts. You get your Dun & Bradstreet number, and the goal is to build to that 80 to 85. The easiest way to do it is by getting what we like to call starter accounts. They are accounts that nobody wants. Home Depot, Staples, Lowe's. We used to do a lot of Quill, but they had a big security breach, so we've tried to stay away from that a little bit. But some of these starter accounts, they're all different because some of them report quarterly, some of them report annually. We have a business credit program that puts people through 12 months of building up this profile, where we want accounts that are going to report monthly. And the reason that that's important is if you go buy your toilet paper at Home Depot and pay it off 8 days later, you're going to benefit from a paydex profile standpoint where we can get you to an 80 to an 85 in usually 3 to 5 months. Once you get to that point, you can go into what we call level 2, which is getting actual credit cards that are tied together with your business and your paydex. And that's going to get you 0%, just like you would on personal credit cards. But once you have these business lines of credit, phase 1, phase 2, you usually have to be in business or build up your credit profile for a year to get actual lines of credit that are off of those properties. So I've done this in the form of HELOCs. I've done this in the form of lines of credit, business credit. But the goal to this is the more money, the more you're able to capitalize on different opportunities. And if you can build up your business credit profile, continue to use business credit, use the business credit, let the business pay for itself, and then pay yourself from there. So that 150 that's on a 4%, all those payments are going to go directly back into it, which will show payment history. And then in 6 months, I'll go get an additional increase off of those lines of credit as well. So it does take time. I want to under promise and over deliver from a time frame standpoint, since we're talking money. But David, let's get that DUNS number going, baby, and build it up.
Really appreciate you describing the DUNS number. We have it at DealMachine, but for my rental properties, I don't like protection. I just buy it easy in my own name right now, get a little umbrella insurance and move on to the next one. I always felt like once I had 20 properties or, like a big enough amount of properties, that then maybe I'll like go back and worry about it. But I've got a pretty high risk tolerance. But now that I know you can get $150,000 of 4% credit line, I might think differently.
Yeah, for sure. Yeah, and in a perfect world, if everything is followed properly, at the end of the year, we have a lot of case studies where we're pretty close to like $450,000 by the end of the year. I mean, we've got a lot of clients going through that process right now, but we're getting over $4 million a month right now in business credit and corporate funding. So protect yourself, maximize on those benefits. And I respect the high risk tolerance, but it's one more way to be able to capitalize on additional opportunity long-term. So kind of cool stuff there. Before I open it up for a little bit more Q&A, there's a couple things tax-wise that I just want to touch on. I know when Matt put this together, it was a lot of the different tax code changes. And so I put together some notes of the major changes that I think are beneficial for you to keep in mind. Every year there are massive tax code changes. And for 2023, they have actually labeled these changes the Inflation Act, tax inflation adjustments for tax year 2023. I'm going to put this into the chat for everyone. If any of you have trouble sleeping, go ahead and start reading that. You'll fall right asleep. But there's over 60 tax code changes simply for inflation. And most of the time when these tax code changes come out on an annual basis, they benefit investors and entrepreneurs, right? Everyone on this call will be benefited from these inflation acts if they're utilized and taken advantage of. Tax planning should happen at the very least on a quarterly basis, right? January, February, March, quarter one, April, May, June, quarter two, so on and so forth. It doesn't mean you have to pay quarterly payments. I don't pay quarterlies on most of my businesses. But going into the fourth quarter, I should be able to say, hey, Matt, great job this year. Either you're paying X amount of dollars in taxes, or you can reinvest it back into your business. You can do a lot of really cool things to be able to make a massive difference. I bought I put out $200,000 worth of an investment into, one of them was a 4-plex and one of them was a 65 unit in Texas. 200,000 total, just to be able to accelerate the depreciation on both those properties, take the tax benefit for all year last year, and that $200,000 investment saved me $180,000 in taxes. So if you're having the planning within the calendar year, oftentimes it's going to greatly benefit you by being able to invest into what your future goals and future plans are, as opposed to dreading tax time like most people do. With that being said, so one of the major changes that was recently released was the standard deduction increased by $900. So it went from $12,950 to $13,850. And one of the hot topics on social media or YouTube is how to pay your kids being self-employed, right? We've probably all seen that. We've probably all heard that. It is not rocket science. It's kind of a cool term. I guess you can do it. But the reason that it works is because you're paying your kids less than the standard deduction. So I saw a super creative meme that was like, just told my kid they got a $900 raise. I thought that was pretty clever.
That's why I have 12 kids myself. You know, I want to
Hey,
maximize the $12,000 I can pay them each per year, tax free.
David, I'm in Utah. That's not even weird.
How many kids do you have, Tommy?
I've got one with one on the way.
When are you going to start paying them?
Congrats.
How quickly can you start pulling that ROI from your kids?
You're supposed to wait until they can do reasonable work. You can't put your 8-year-old on heavy equipment and have them dig a hole for you, David. I'm sorry. However, my beautiful daughter, she's 2 years old. Let me show you a picture of her, just so I can justify paying her another salary this week.
Oh,
She's a model. We all think our kids are, right? This is Quinn. She's the cutest. She last year she made $12,900 as a 1-year-old for helping me with marketing. But oftentimes you do want to justify reasonable tasks. Are they helping you with mailers? Are they cleaning your office?
so wait, your 1-year-old, like you use her photo in your marketing?
all the social media,
Love
all
it.
the photos. She deserves to get paid for that likeliness. Justifying $12,000 really isn't that difficult either. It's you do $1,000 a month, you're good.
So now does she also like have expenses that you use that 12K for, or what do you do with the 12,000 actually?
So I have some people are going to hate this, but we've put this into a Roth IRA for now. The goal is by the time she's 25 for that to accumulate to be $1 million in that account that she can invest into real estate, start her own business, go to college, whatever she wants to do, right? So that's the route that we've gone with her, and we'll probably go with our next daughter as well. We got another girl on the way, girl dad. But to David's point, it's obvious that you're doing this with all 12 of your kids, because what a lot of our clients do is they'll pay their kids for the work within the business, and then they'll have them pay for their sporting equipment, for their activities, for their different expenses. They're still coming from you, but if you're paying them and teaching them how to use and balance that money, great financial literacy lessons, and they can use that to pay for their everyday type expenses as well. So are you doing that currently?
That's I have no kids. I have 2 cats. Unfortunately, there's not a way I know of that I can use my cats for a tax-free strategy, but just was kidding. But I think people will remember this lesson if they have kids. I had no idea you could use a 1-year-old for marketing. That makes a lot of sense.
Most accountants and CPAs will tell you they should be 6 to 8 years old to start it. Like anything, the more money you make, the easier it is to justify some of these deductions. So I don't want you to raise red flags. I don't want you to get in trouble. I want you to do what's best for you. If your kids are 2, 3, 4 years old and they're not legitimately doing any work for you, there are plenty of other areas within the tax code to lower your chance of risk within an audit from a tax standpoint. We want to play by the rules. We really do. But that leads me to another hot topic, another tax strategy that oftentimes gets thrown out there, which is the Augusta rule. Have we heard of the Augusta rule? The Augusta rule is the definition of it's not what you know, it's who you know. The Masters golf tournament that happens every year, there's a lot of very awesome houses right there around Augusta and big old mansions. I saw a report that last year people were renting out their houses for a week for $30,000 a week for the Masters golf tournament to come into town. So what was happening is these people are renting them out and they weren't claiming the income tax. Matt, go ahead.
We have a member, reoccurring member, Paul. I think he's on the line. He's based in Augusta, so he can validate any stories there, I think. But
Paul, calling Paul.
Oh, he dropped off. Shoot, never mind. He was on earlier.
He's heard it. He's heard the Augusta before. But so in the 1970s, this gets passed all the way through Congress and everything else, and they end up passing what they call the Augusta rule. And what this says is you can rent out your property up to 14 days a year tax-free. So 13 days last year, I rented my house out from my business to have an event, to have a barbecue, to have a gathering, to have a meeting. It's thousands of dollars in tax savings by just playing by the rules, giving yourself an alibi, filling out the documentation to show that it was rented. Has to be a reasonable amount for the area. But Augusta rule, shout out Masters Golf Tournament. Another ridiculous one that's an easy way to save thousands of dollars in taxes. Another one is the gift tax. This is probably the last one I'll cover, so we have time for Q&A as well. But you can gift each one of your children last year what was up to $16,000 a year. This year up to $17,000 a year. So on top of paying my daughter, she will get a $17,000 gift that will be able to compound into that amount that's deductible for me. She doesn't have to claim taxable income on it. So a lot of benefit as far as that is concerned. My point to this is there's a ton of cool strategies. And I'm going back to Sean where I say, I'm happy that you have the protection. I'm happy that you have the privacy. I'm happy that you've maximized on the tax benefits by having the proper entities in place. But now the fun really starts. Let's make sure you have a system to track your expenses. Let's make sure you have an investor-friendly accountant or CPA that can help you get creative like this throughout the course of the year, so that the goal is to get back to that net zero and reinvest into your business throughout the year.
Great stuff. We have a ton of good questions in the chat here. So Tommy, did you have anything else you wanted to make sure we covered before we got to Q&A? Or
I think for now, let's go through some questions, and I'm sure there'll be plenty that comes from it from there.
Awesome, cool. Katie, I know you had your hand raised and you had a couple of follow-up questions. Do you want to have that conversation with Tommy here?
Yes. Hi. We just started with Joe Homebuyer, and we applied for Prime and started with Prime through Joe Homebuyer. So I had a couple of questions because going through the process, you know, it was easy, but then when we got all of the paperwork, there was a few things that I was just kind of confused on. So I was just wondering, do we need an EIN for our holding company?
Yeah, you should have one. So if we set up that holding company for you, just pull it up and that EIN number should be in the document. Did you get the email with all the documents in the operating, the articles, EIN and banking resolution document?
So I got the EIN, but it's showing, as far as the address or the member, it's showing as our LLC in Texas, not Wyoming. If that makes sense. It's not showing our company, our holding company based in Wyoming.
I gotcha. I'll have our team. I wonder if they crossed them on your emails, but
Okay.
either way, I'll have them resend them to you in 2 different emails so that everything's lined up. Thank you for telling me. I'll make sure that everything's straightened out and I'll have that emailed over to you within the hour.
Okay, and I also had another question. So our business, I have a few, sorry.
Good.
Our business address, so our local LLC in Texas, it's stating that our business and physical address is in Austin, but our actual home physical address where we really work out of is a completely different place. So is there a reason why it's in a non-affiliated place that I have no idea where this place is, you know, versus where we're actually at, if that makes sense?
Is this like an everything's bigger in Texas opportunity for me? Is that what you're setting me up for?
Basically, sure, go for it.
Yes, there is very good reason for that, and that is totally correct, and that all of that is good. So let me kind of explain this as well. So we got the holding company. Her question's the holding company's out of Wyoming. My subsidiary is out of Texas. The registered agent that we use and have a relationship with happens to be out of Austin. And the reason that we do that is because if you were to get sued off of this subsidiary where you're doing business, we don't want it to show your name and your address, because we don't want someone showing up to your house. We don't want someone knowing who you are. 99% of people, I think, have awesome intentions. It's the 1% that we got to look out for, but that way no one's showing up. They would show up to that Austin address where I have a poor employee working 9 to 5 Monday through Friday. And if they want to sue you, they'll serve the papers there and they'll get those papers to you that you're going through that lawsuit. So it's one more way to just give you the privacy and give you the protection.
Okay.
A story that I'll share with you is I was speaking at an event in Orlando, Florida in November, and someone ran up to me and they're like, Tommy, you don't know me, but I got to tell you a story real quick. They're like, when I heard you talk about the Wyoming holding company, I looked at my wife and I'm like, we don't need that. We'll just set it up out of Florida. And so they set it up themselves, set it up out of Florida, got a long-term rental, and a month later put that LLC on the rental.
Okay.
2 months later, Florida was hit with a hurricane and their power went out. And the person looked up where they were paying the rent, which was to the LLC, which was great, but their address was listed as opposed to the Austin address in this case.
Okay.
At 2 a.m, the guy showed up banging on his windows trying to get into his house. Everything worked out. Nothing crazy happened from there, but we ended up setting him up from there with holding company, subsidiary, total privacy, so that his wife allowed him to continue moving forward with real estate. So it's a cool success story at the end of the day, but that privacy aspect is great long-term, especially as you grow, scale, and get more property.
Okay. Awesome. And I asked that just because we're trying to also open a business checking account, but it's asking us for our physical address. So in that case, should we put our home address or do we put our business address?
Yeah, put your home address with anything bank. So in the 1970s, there was a Banking Resolution Act that was passed, and banks are allowed to ask for your information, but it is private information. So feel free with the bank to give them your address, but for anything that's client facing, you obviously don't want your address to be associated.
Okay. And I have one last question.
Yeah.
You guys were mentioning about, including the kids and being able to pay them and all of that. I would love to do that because I have 2 kids. And I would like them to be millionaires by the time they're, my age and all that stuff. That would be awesome. But is there a way to include them in the business without kind of advertising their photo or, being seen in that case?
Yeah, get them cleaning up that office, get them helping you with mailers. There's plenty of things to do. If any business owner's got odd jobs and tasks that can teach some good work ethic. So get creative with it. But if there's things that they can do and be assigned to that are going to help you, it can be anything as long as you're tracking it, organizing it, and you're not embarking on the Child Labor Act of putting them on heavy equipment and digging holes like David is with his cats, then it should be good.
Well, they're 5 and 2. So
they got to help with actual business things. If they're not, it is going to raise a red flag. But once again, there's other ways that if they're earlier than they can help with the business, there's other ways you can lower that tax liability to still benefit you and your business. The other thing is like a 2 and a 5-year-old. You graduate high school, algebra, science projects, things that you never use, right? The financial literacy of that no one cares about your money more than you do. And if you can teach and you can understand for your kids, your grandkids, your loved ones, your friends, your family. I've got my daughter tied as an authorized user on one of my credit cards. The first hardest thing about credit is on-time payments. The second is length of credit history, which you really don't have any control of. 25 years of credit history is how you have an excellent rating. So by the time my daughter's 25, she will have an excellent credit rating. She should have an 800 by the time she's 5, which is going to be a cool YouTube series. But one more thing, that if you can have them as authorized users, you can educate them on. David mentioned this. I saw someone else saying dance is expensive. You pay them for the work they're doing. They're paying for dance lessons, sports, activities. You're teaching them how to balance financial topics. And then the authorized user aspects helps build their credit as well. There's a lot of cool things that you can do that not only benefit you and your business, but become generational. I think that's really been my passion ever since I had my daughter. I'm like, everything I thought mattered doesn't. How do I help her, and how do I make sure she understands how money works and financial topics that are important? So cool stuff you can do.
Okay. Awesome. Thank
Great,
you.
great
Of course, thank
questions.
you.
Yeah.
Great questions for sure. Thank you for that. I'll get you that email within the hour. Look for it from Lexi.
Awesome. Yeah. Thanks again for being a resource for everybody here, Tommy. But I'll try to keep going through for the next, 15 minutes ish. I'll go in order for what asked. Let's see. Andre had asked, well, how will the Corporate Transparency Act affect this privacy? This was a little while ago.
Yeah, great question. So the Corporate Transparency Act hasn't been passed. I doubt it gets passed. If it does, it will affect it. It's the same thing as the banking act that was passed in the 70s, where you have to give the information to the banks. But at the end of the day, there's already states that abide by it, right? So not all states are created equal when it comes to state tax or corporate law. So naturally, more of the red states are usually more business friendly. I didn't come on here to get political with you, but if you're asking good questions, here's an answer for you. Blue states are going to have more of that transparency. They're going to go in that route if they haven't already. Red states are going to give you more privacy, but you as an investor, you as an entrepreneur, have the ability to make sure that you have the privacy that you choose. And until it's passed, I'll believe it, but I don't see it going through in all 50 states. I think it'll be on the state level, not the federal level, if it does go through. But we don't know. That could change tomorrow. I could look like a total idiot. We'll see what happens. For now, that's not the case.
What resources do you use to like stay informed like that? I'm just curious what people can be using to stay up on this kind of stuff.
Tommy is the resource.
True.
I'm definitely not the resource. I got way smarter people that are in this building than me. I can promise you that. That's part. Surround yourself with smarter people than yourself. I get the luxury. I will say one thing that I really love about the position that I'm in with Prime Corporate is, as we've grown and as we've scaled, I get to go ask a question to the attorney and ask the exact same question to the CPA and get two totally different answers and argue both of their points against each other to where we land somewhere in the middle. So that's what's, once again, challenging about these topics, is the attorney is going to lean towards asset protection. If the world was ran by attorneys, no one would leave their house. It's too dangerous. If the world was ran by accountants, it would not only be very boring, but there wouldn't be much going on. So there's somewhere in the middle of these two topics, between the accounting world and the attorney world, that investors have this gray area to be able to operate in. And over the last 10 years, I've just stayed curious to ask those questions and try and find the areas that benefit investors and entrepreneurs to be able to share that info.
Hey, Tommy, I have a question.
Sure.
All right. It's really tough. The hardest part about real estate investing is actually getting started, in my opinion. And there's books like Rich Dad, Poor Dad that say you've got to build your team, your accountant, your insurance person, your attorney. And for me, I totally rejected that one aspect of the book because it's like, what are you going to talk to him about? You don't even have a deal yet. And so that's why I started just going to get deals. And I'm curious, when do you think it would be wise to actually get an LLC? Because I am on the one end of the spectrum where I can tolerate a lot of risk. I'm very curious from your perspective, when you think is the right time.
I'm going to share a funny story with you, and I'm going to answer the question. Rich Dad, Poor Dad, I went to dinner with Robert Kiyosaki probably about 6 months ago, and he ordered fish and I ordered a steak. And as soon as it came, he's like, I wanted steak. Give me a bite of your steak. So I have fed a bite of steak to Robert Kiyosaki. That's my claim to fame. Put it on my grave. Anyway, there is no tax. It's a really good question. This is probably this is the most common question that I get when people are first starting out. And the way that I will answer this question is, there is no tax code that says that you have to be good at business. But there is a tax code that says if you show the intent to generate income, you can take business related deductions. So can you do these things without any business entity? Yes, it worked for you, and that's awesome. But I truly believe that everyone in the US should be self-employed to some extent, whether it's a side hustle, a side business, or full-time self-employment. And the reason that I say it is because there's over 76,000 pages of a tax code. Most of them benefit investors and entrepreneurs. So if you have the intent to generate income, from the second you read the book, from the second you watch the video, from the second you say, I want to be in real estate, I feel that that is the time to set yourself up legitimately from the beginning, not only to capitalize on the deductions that you make, but also to start to build up that business credit, right? There's like that, what's the saying of like, when's the best time to start a business? Now or 10 years ago? I think the sooner that you can start the longevity of that entity, the sooner that you can have a true profit and loss and track your expenses, the more that you treat it like a business as opposed, you treat it like a hobby, it's going to cost you like a hobby. Treat it like a business, reap the rewards of what a business have to offer. Your perspective is probably different because you're go-getter, go make it happen. I'm getting deals done. I've got a biased opinion. I live in this world. I see all the nightmares that could happen on the first deal go wrong. So as much as I don't want to use the scare tactics, logically, the tax benefits are still there to set up as a business and build the longevity of the entity.
Thanks for answering the question. I want to ask more questions, but let's get some from the audience before I go too deep.
Yeah, I'll try to do rapid fire here. We've probably got like 6 or 7 sitting there for you. So Tommy, I know Jerry had asked, do you use a trust for each of your properties?
Great question. I do not. I still have all mine in entities. So I've got clients that do both. The trust, the will, the living will, the power of attorney, which by the way, if you own real estate, you should have a living trust, right? And this is a good example of when should you set up a trust? When you're comfortable, when it makes sense, but there's never a right time. They're difficult topics to talk about. A living trust is usually the way that you're going to avoid probate. Ask the parents, ask the grandparents, do you have a living trust in place? My estate plan is completely separate. And the reason for that is if any money runs through the trust, it's taxed at the highest rate. You make $14,000 in a trust, it's taxed at 37%. So you might as well run it through an entity where I'm going to get more of the deductions and lower my taxable income. But if you're just going to make some super high-end investors that I work with will purchase and put everything into the trust, but they're just using it for tax benefit to write it off and leaving it in the trust. They don't care to cash flow. They're using it for tax benefits. You don't want to operate your business out of a trust because tax-wise, you're going to pay the price. But it's great for protection if that's what your goal is.
Great breakdown, Jerry. Hopefully that answers your question there. I'll say we had quite a few asking follow-ups around the child write-off stuff. So we had Joanne said, can you do this with a grandchild? And then Rob had asked, can you do this with a stepdaughter?
There are ways you can do it with grandchildren. There are more things that bring up more red tape and more red flags. So we got to be careful. Stepchild, if they're your dependent, then yes, there are ways that you can do that as well.
Fantastic. Robin had said, with an S corp, do we pay the child through a W-2 or direct distribution? And then also asked, is there a limit for the Roth IRA contributions for the children?
Yes, it is dependent on the income, or it's up to $6,000 a year. I think they actually just upped that to $7,000. I'm supposed to just defer and tell you to talk to your financial advisor in this situation, but I don't know off the top of my head. There are limitations. I don't know the numbers off the top of my head, but yes, there are.
There we go. Tim also asked, if I have an LLC and business line of credit on my real estate agent business in Nevada, can I translate on any new LLCs for my investments, and how?
So you would do, yes, you can. You would do a foreign entity form if you were to do it outside of the state. Most of the time, I will say it doesn't make sense, because if you have the Nevada LLC and you're doing a foreign entity, you're paying fees twice. So we want to try and keep the cost down while still having the asset protection and the tax benefits. So there are ways to do it, but I would tell you that most of the time it's not going to make sense to do that.
Great. I think you just
Thank
answered
you.
this. Oh, there you go. Perfect, Kim. I think you just answered this, but Sean had asked, can I assume the paying of of kids is for work is only for dependent age children?
Correct. Yes.
Yeah. Okay, gotcha.
Yeah.
Cool. Katie had one more question as well, saying when opening a business checking account, because we have a holding company and a state LLC, which EIN do we use if we're working on our local state, but the bank itself is a national bank?
Yeah, I think that we addressed this, but just to make sure.
Yeah.
They're gonna have separate EIN numbers. So the one that you're doing the business out of would be the Texas entity. You would use the Texas EIN for doing business in that scenario. You technically wouldn't really even need an EIN number for the Wyoming holding company because you're most likely not going to be doing business out of it, but we still get it for you as part of the total service. When we set up an entity, we've committed to just taking care of everything, draft, document, legally prepare your articles, your operating agreement. We pay the state fees, we pay the filing fees. So A to Z, we take care of everything on those, which is why we do it. But you're going to use the EIN that's tied together with that Texas entity for sure.
Thanks for clarifying there. I actually threw too many questions at you earlier. For Robin, I missed one of them. The with an S corp, do we pay the child through a W-2 or direct distribution? And Robin clarified they have a 15 and 17-year-old.
Awesome. Yeah, there's ways to do both. In most cases, you'll want to issue them a W-2. The other thing that I really like about the W-2 offering there, Robin, 15 and 17, you have them help you with your business. And when they're applying for their first couple jobs, it's a W-2 income. Pay them through your business so they're not filling out empty resumes that say I was working for mom. It says I was working for RH Creative Solutions doing X, Y, and Z. I think the more that you legitimize it, the better. And you can use that as a way to just help with the financial literacy for those kiddos as well.
Great. And can you clarify this one more time as well? I know David had asked, after I register for the Dun and Bradstreet for business credit, what's the next step after that?
So once you get your DUNS number, you want to get some starter accounts. And those starter accounts are the ones that I referenced, are the ones that nobody wants. I joke that I think that we're like 80% responsible for toilet paper sales out of Home Depot, because people are always like, I don't want to have any of these cards. And I'm like, go get a Home Depot card and go buy your toilet paper and your paper towels from Home Depot, pay it off in 8 days. So there are ways that you can build that up on a monthly basis. So every time you guys go to Home Depot and see toilet paper, you're going to think of me, because no one buys it unless they're trying to build business credit. So there's certain things from certain accounts that you can still benefit from. I don't want you to spend unnecessary money either, but a lot of those starter accounts that report monthly do it because their product really isn't that great. So if you can report monthly and build up larger lines of credit, you can do that. But once again, I look at most of the clients that we work with are like, how can I build the largest line of credit the quickest? And we've accommodated to that, right? It's kind of the world that we're living in. But there are some situations where you can build it over the course of a year and get more accounts that report weekly or report quarterly or annually and accomplish the same thing. But it's what are you most interested in? So starter accounts that report monthly would be the answer directly.
Perfect. Appreciate all the such actionable tips and advice throughout this whole thing, Tommy. And I know we're overtime here now. David, do you have any burning questions here, or Tommy? I appreciate you staying on right now, man. But
Hey, Tommy, what's your Instagram? I would like to connect and follow you there.
yeah, how can everyone connect with you, actually, Tommy?
Yeah, Prime Corporate Services, everything. Mine is Tom Thornburgh, but you don't want mine. Just go. Mine's just my beautiful daughter and my awesome, beautiful wife. So Prime Corporate Services, we've got Instagram, Facebook, LinkedIn, you name it. I recommend following us for sure. We do a tax tip every week. One, hopefully it helps you file less, pay less in taxes. Two, it keeps you aware of those taxes on a weekly basis. So Prime Corporate Services on everything. We also have a link. All of you can take advantage of a free consultation if you choose to do so as well. where all of your situations are different. Those of you that are already working with us, thank you for showing up and being here. And all of you have advisors that are already working with us. Always reach out to them, call them, email them, bug them half to death. That's what they're getting paid for. But if any of you aren't working with us and would like to, feel free to schedule an appointment on that link right there. One thing I'm going to leave you with, and David, this is for you. We had a client in November that just signed up, paid for a course, said, I'm not going to do any deals before the end of the year. I want to wait until January to set up my entity. We're like, set it up. You already made the investment, write it off with your taxes. This individual made $55,000 last year, W-2 income. We set up the LLC and filed their taxes, wrote off startup expenses and organizational expenses, which they shouldn't have or wouldn't have been able to as an individual. By making that decision, it saved them $5,400 in taxes back in their pocket, as opposed to Uncle Sam. So even if your annual income is lower,
It's like half a child.
Yeah, it's a massive benefit. So it allows you to get more aggressive on business related expenses when you have a legitimate business to do it from.
Well, thanks for explaining that. You've definitely opened my eyes on this call, Tommy, and I'm so glad you joined us.
Yeah, great stuff, Tommy. Appreciate you doing all this. Yeah, and if anybody else, if you want a direct connection to Tommy as well, feel free. I put my email in the chat there, just matt@dealmachine.com. Happy to loop you in directly with Tommy as well. But we'll upload this replay on content.dealmachine.com here after this. Again, if you have Deal Machine specific questions, make sure to go to the virtual office hours that Ryan Hewitt hosts. Ryan, if you could post that one more time in the chat for us here, that'd be great. But otherwise, we do these, same time, same place next week. Tommy, we'll have to have you back on again in the future. Really appreciate you doing this, man.
For sure. I'd love it. Sounds good. Good seeing you. Thanks for all the questions as well. Thanks for being here.
Bye, Tommy.
Fantastic. Thanks, guys. And I'll see you next week. Have a good one.